Let's be real. If you live in California, your car insurance could cost you $500 to $900 more per month than drivers in other states, even with a clean record. In New York, some drivers are seeing quotes of $916 a month for a basic Honda Civic. In Boston, Massachusetts, newly licensed drivers are being charged $800 a month. And no, you're not alone. In 2025, 57% of U.S. drivers are actively shopping for new auto insurance. That's the highest number ever recorded in 19 years. Why? Because prices feel random, unfair, and honestly, broken. Here's a real story. A driver in California said, "I'm getting quotes over $500 a month with a clean record. What the F is going on?" Another driver in New York shared this. "Geico quoted me $916 a month for a 2020 Civic. Isn't that insane?" If this sounds like you, keep listening. Quick question. Which state do you live in? Drop your state in the comments right now. Most drivers believe one thing. Insurance prices should be the same everywhere. That is legally false. Every U.S. state allows insurance companies to calculate risk differently, and that's where everything explodes. There is no single federal car insurance price law. Insurance is regulated state by insurance commissioners. That means California rules are not Texas rules. New York pricing is not Florida pricing. Same driver, same car, totally different bill. According to the California Department of Insurance, costs vary, even in the same area. Each company estimates your risk differently. And the NAIC confirms insurers legally use your driving record, your zip code, your vehicle type, your coverage limits, and claims data. That's why two quotes can be hundreds of dollars apart. Picture this. You're online entering your information. You change one dropdown, coverage limits. Your quote jumps $200 instantly. Nothing about you changed, only the math. Here's how to fix this. First step, lock your coverage before comparing quotes. State insurance departments say never compare quotes unless your coverage limits, deductibles, and driver list are identical. Otherwise, the comparison is meaningless. Second step, use multiple sources. Official guidance recommends direct insurance company websites, licensed independent agents, and state-approved resources. Do not rely on just one comparison site. Now, here's the part most drivers miss. California minimum liability is not the same as New York minimum liability. Lower minimums can actually increase your quote because insurers see you as higher risk. Yes, cheaper coverage can cost more. Quick poll. Which is worse in your state, the DMV or insurance companies? Comment below. Let's compare states. In California, stricter regulations, higher claims costs. In Texas, lower average premiums, different rate filings. Same driver, same car, very different reality. One more warning. The NAIC says online comparison tools are starting points only. They may exclude licensed insurers in your state. Always verify the company is state licensed. And here's the DMV trap. You cannot register a vehicle without valid insurance. In California, the law requires insurance first, then the DMV is notified electronically. No insurance, no registration. So here's your action plan. Fix your coverage limits, compare at least 3 insurers, verify state licensing, and review your quotes every single year. This is exactly why 57% of U.S. drivers are shopping for insurance in 2025. Quick recap. California, highest frustration. New York, biggest shock quotes. Texas, lower averages. In the next video, I'll break down which states punish new drivers the most legally. Subscribe now and save money on your next renewal.